This time, gentleman from New Jersey.
And I thank the chair. So just off the top, the name of the program that we have today is Promoting Economic Recovery and Job Creation, the Road Forward. I think what you're all testifying to is right on the mark to describe basically where we are, what regulations are in place, and whether it's Fed policy, as you're just, Professor Cohen is just talking about, or otherwise, these all go to the point of what do we need to do in order to get our economy back on track and create jobs. I'm going to go a little field on the first question here, and I guess I'll throw it out to Dr. Poole, but anybody else can just chime in real quickly on this. There was a piece on CNBC just this weekend with regard to Fed accounting. That's why I throw it out to you. It said an accounting methodology was just recently reported in their annual or their weekly report, which is argued that it changes the central bank to allow the Fed to incur losses, even substantial losses, without eroding capital. Any future losses the Fed may incur, it said, will now show up as a negative liability as opposed to a reduction in the Fed's capital, thereby making a negative capital situation technically impossible. That was a comment of Brian Smedley, a former New York Fed staffer. First, are you familiar with the recent change they have on their accounting policy?
I'm not familiar with that, but I would like to emphasize the following very simple point.
Yep.
The central bank is not in business to make a profit. It's in business to make the economy work better. And if the Federal Reserve has to take losses to make the economy work better, to help create jobs, then so be it.
Right, but don't you want to have the, I understand, but don't you want that transparency there to make sure, the argument goes right now, we saw what's going on in Greece and what have you, and the question is, can our Federal Reserve basically ever go broke? This accounting change, basically, I guess the Fed, anybody else can chime in on this, the Fed does their own accounting methodology. We're not setting the accounting rules for the Fed. Is that correct, first of all?
The Federal Reserve does its own accounting, but it is audited by Deloitte & Touche, a private, I think it's D&T these days.
But the audit goes against the rules that they established for themselves, right?
To a considerable extent, but the Federal Reserve follows GAAP accounting in most respects. I think the point is that this will be completely transparent, Congressman. If you want to take this account and subtract it from another account, in fact, transparency, if anything, will be increased because that number will be right there published on a weekly basis. So it's not about transparency. I think the profitability, to Professor Poole's point, this isn't about profitability. The viability of the institution is absolutely unassailable. It has, the Congress, have given it the seniorage privilege. We, the Federal Reserve, I'm still doing that a little bit, I'm sorry. Okay. The Federal Reserve issues the currency on behalf of the country and realizes the returns and returns $30 or $40 billion a year to the Treasury from doing that. And the capital on the books of the Federal Reserve is not in any way related to the present value of future stream of earnings.
Right. But anyway, I wouldn't want to spend a lot of time, but this puts it, as I understand it, puts it as a liability to the Treasury as opposed to a liability of the Fed's balance sheet, which it has been up until this point in time.
So it's like, I mean, this situation hasn't really arisen in any significant way before, but there have been a few occasions where the Federal Reserve delayed sending money to the Treasury in order to replenish the capital account. This is a little bit like a deferred tax asset on a books of a private corporation, I think.
Okay. Professor Scott, we talked about the issue of cost-benefit analysis that you did there. So you have all the Dodd-Frank, running out of time already. You have all the Dodd-Frank rules where you're not going to have cost-benefit analysis. You just want to elaborate quickly as to the need for those there and across the board in general. Is that being a good thing or a bad thing, what we should be doing?
Well, I think if we're concerned about the impact on the economy when we're promulgating regulations, it behooves us to look at the costs and benefits of the regulation. It's pretty simple.
Well, the administration doesn't think so because, I mean, they said they want to scrub all the they want to scrub all the regulations. There's 195 regulations that are not here, there are 195 regulations that are just next to the formal process. They won't be scrubbed. There's about 300 regulations that are coming out of Dodd-Frank. They won't be scrubbed. So on the one hand, last night they said, let's scrub everything, but let's not scrub these, 495 regulations,
Well,
and do the cost-benefit analysis of it.
well, I think we at least, Congressman, should require that any regulations now in process, okay, be subject to cost-benefit analysis. So not everything is done. You know, they're in the process of asking for comments on the regulation.
Yeah.
They haven't implemented very much regulation yet. Right. If the Congress were to act now to require this, I think it would have a major impact.
Okay. And thank you.